Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
Okay, today we are going to talk about the 5 reasons there will be no housing market crash. This is from a Bankrate article. The data with the slides and everything that we have from here. We have a bunch of charts. We have a bunch of quotes. We have chief economists from a couple different companies, NAR, Zillow. And what spawned this was there's been this, there's the crash bros, right? And the crash bros have been predicting annual housing crashes this is the 6th year now, 5th or 6th year of a housing crash. It hadn't happened yet. So now they're out there still calling for housing crashes. So we're going to go through the data. We're going to show you and let you decide, right? We report, you decide. I wonder if we could file a trademark on that.
I think somebody else mentioned those words before, but okay.
Fine. Okay, so one of the crash bros was on a national thing, and he basically said, the housing market's going to crash. And then he said, oh, actually, it's just like 2 markets that were just overbought a little bit, and they're actually not really going to crash. They're probably just going to have, and one of them, he says, already crashing. It was down, I think it was Austin. It's down 3% in a year. Oh my God. It's up like 80%. In the last 5 years, it was down 3, so it's crashed. Okay, so Juana.
Well, Austin in particular just got a big beneficiary, didn't they?
Yes, they're getting, I think, Twitter. Twitter is going to be headquartered out there. And I think SpaceX is moving to Starbase. And there's maybe some other California VCs that will be heading out to Texas. Right. It's going to be interesting. Okay, we are going to go through these. It'll be very fun. Okay, yes. Let's do 1. This is the number 1. This is what it says. Inventories are still very low. A balanced market typically has a 5 or 6 month supply of housing inventory. NAR says there was just a 3.7 month of supply. Homes for sale for May. Actually quite improvement. Back in early 22, that was 1.7 months. The ongoing lack of inventory explains why many buyers still have little choice but to bid up prices and indicates that the supply and demand equation simply won't allow price crash in the near future. Okay, but it's more than that. 2022 was, first of all, a little of an anomaly because interest rates, right?
Right.
Okay, but in the housing crash, there were 4 million houses on the market in the U.S. We have like 600,000.
Right.
It's substantially, and remember, there were less people back then. Okay, substantially different thing. What is causing the inventory to be so low?
A couple things. First of all, we have the people who are fortunate enough, about 70% of you who have mortgages, not counting the 50% of you who don't have mortgages. 70% of you who have mortgages have mortgages that are at least 3 points below the going rate. So somewhere in the neighborhood of give or take 3%. So congratulations to those of you that have those mortgages or have homes that are paid off. So that's part of it. The other part, of course, is the underbuilding, right? So we do not have enough homes being built for the population that we have and for the demand that we have. The reason we don't have enough homes being built is because builders are still smarting from the Great Recession when they got hurt, and they don't want to do that again. So they are building enough homes to be profitable and very secure in their knowledge that they have many, many years of homes to sell in the future for their highest profits yet, and they're very content with that. They are not looking to saturate the market. They are looking at this as a long game rather than a quick gain.
Which brings us to point number 2. Builders are not building enough quickly to meet demand.
I already said that.
Home builders have not ramped up to the pre-2007 levels. They're not going to. Some of the estimates are we're 6-7 million homes short. Builders should have built, but they haven't built. There is very little incentive for builders to overbuild. If anything, they're, like you said, they're underbuilding because they're trying to maximize profit. So the builders are in a situation where they don't really, like, you're telling a business to try to provide affordable housing. It's like trying to tell an airline to provide you an affordable first-class ticket to Hawaii. Doesn't work that way. They go, you know what? No, we don't want to put too many planes on certain routes because then there'll be we'll have to jump the fares to fill the seats. So builders are doing the same thing. They're just going to produce the maximum maximum revenue.
Right.
Right. TR, what they call it TR max in economic terms. Okay. Number 3. This is a huge one. We've talked about this for really the last 4 years. Demographic trends are creating new buyers. There's strong demand for homes on many fronts. Many Americans already own homes. Decided during the pandemic they need bigger places, especially with the rise of remote working. Millennials are a huge group and in their prime buying years, and Hispanics are a growing demographic. Also keen on home ownership. We know that the 30% of all new buyers over the next decade are going to be Hispanics.
Mm-hmm.
We have a massive amount of immigration from Spanish-speaking countries south of the U.S., and not only the millennials, but the Gen Zs are making, they're the highest, right now, the highest paid generation for their age.
That's
no
right.
one of that age made as much as these guys are making.
Mm-hmm.
They are starting to demand housing,
Mm-hmm.
and there's just not much of it, right? Demographics are huge here. So talk about that a little, and then we'll talk about the boomers.
Okay, so I think the important takeaway from this is, like you said, they're earning more than any generation has at this point in their lives, and because they're earning more, they have more money to spend, and that's part of what's pushing prices up. So that's something to really understand as far as when people say, well, but who can afford these homes? Well, this is who can afford these homes. These Gen Zers can afford these homes. So that's something to really keep in mind as far as the home values, and part of the support for the home values is a market, buyers who are willing and able to pay this kind of money. I think one of the other interesting things is that I was reading that the median credit score for somebody buying a home now is 770.
Yeah.
That is unbelievable. I mean, look, you're talking 800 is like the gold standard, right? So for 770 for the median, that's just unbelievable. So that lets you know that these are well qualified buyers. These are buyers that have financial discipline, that have probably savings. They have financial education as far as understanding how money works and how savings works and how debt works. And so all these things play into when these people do secure a home, they're very likely to be able to meet their financial obligation and not run into difficulties.
Right. This idea also that the baby boomers would leave like this massive, okay, first of all, the boomers, first of all, are 60 and over. Mm-hmm. It's going to take 40 years for all of them to die. Okay. Mm-hmm. Some of them will live to be 100. Remember that if a boomer, let's say, I'll give you an example. I have 2 friends who are in their 60s. They're both 65, 66-ish. Ready for this? Their wives are in their 40s. Mm-hmm. So when the boomer dies, the wife is just going to take over the house. Mm-hmm. And she's not going to die for 40 or 50 years. Mm-hmm. So the idea that the boomers will all die and leave a ton of houses is not the case. Mm-hmm. Ready for this? The boomers are the 3rd largest. Mm-hmm. They're not even the largest. They're the 3rd largest. There's more millennials, mm-hmm. and there's more Gen X. Mm-hmm. So one in our Gen X, the boomers basically are 60 to 80-ish right now. 60 to 79, I think, is the age range for the boomers. And they're not all going to die and leave a bunch of houses. That's like a fake thing. We did a whole video on that.
Right, and the other thing to keep in mind, anecdotally speaking, we know several ladies who have lost their husbands in the last few years. These ladies are in their mid-70s. Their husbands were in their mid to late 70s when they passed. These ladies are still in their family home. So these are homes that are quite large. They're in these homes by themselves. So when the husband does pass, and I say the husband because most of the time women outlive the men. So when the husband does pass, these homes will not come on the market. These ladies, while they're traveling to be with their children and grandchildren, they are keeping these homes. So these homes will not necessarily come on the market as soon as the older of the spouses passes.
Okay. Reason number 4, we touched on this a little. Lending standards remain strict. In 2007, you could just get a loan for no reason. They call them liar's loans or ninja loans. No, you didn't have to provide income or anything. If you watch the movie The Big Short, it will highlight all that. Today, they have tough lending standards, as Juana mentioned. The median credit score for a borrower in the first quarter of 2024 was 770. We have the whole lending thing has been tightened up.
It has, and the really interesting thing about it is that it has been tightened up even more while interest rates have been going up. And I think that's an interesting thing to point out. They have tightened things up more for a variety of reasons. So that means that when interest rates go down and more buyers enter the market, they will be even better qualified buyers because lending standards have continued to tighten.
Number 5, foreclosure activity is muted. In the years after the housing crash, millions of foreclosures flooded the market. It was actually 4 million. To give you a perspective, now this was an actual foreclosure, not a filing. This was the no kidding foreclosure. In May of this year, nationwide, we had about 186,000 filings. Now remember, in Nevada, it takes 12 filings on average before you actually get a foreclosure. So that means maybe there'll be 200,000 or 300,000 for the whole nation for a year. That is less than 10% of what there was back in the cause of the housing crash. It's substantially less, right?
Right.
We also know this. I'll give you an example in Vegas. In the last year, meaning last 365 days, we had about 150 total actual foreclosures. 150. We used to have that in a day. Remember, I'd go down the trustee sale. We had a full-time person would sit down there and bid on houses and try to get houses for us. And we would have day where there's 120 houses. They would just in one day.
Right.
Now that's a year. You go down there in a week and you'll have days where there's no houses. They'll be like, yeah, we don't have anything today. Right. Okay. We've got some other very cool things here. These are some quotes for some people. So let's start with this first bullet. There's some bullet points here. This is just of the overall health of the housing market. Prices hit a new all-time high in May, according to NAR, which reports that median existing home prices were up 5.8 over last year. 5.81 is kind of a normal year, right? For home prices.
Yeah.
The 11th month in a row of year-over-year jumps. May 2024 median of 419 surpassed the previous record high of 413.8, reached June 2022, which is when the Crash Bros predicted 40 to 50% housing price crash. Juana, 419 is greater than 413. So is that 40 or is that 50% less?
So we are at an all-time high this spring.
I know.
For real estate prices across the nation, when you're looking at the whole nation as a whole.
For all the people that listen to Crash Bros and panic sold your house in 2022 and now you're a renter and you're hating it.
Sorry.
And you wish you had your house back. It's not our fault. We told you. You didn't listen to us. Anyway, okay. Or you didn't buy a house because you were going to wait for the crash. Okay. Here's another quote. Lauren Chun, chief economist of NAR. Prices will remain firm and will not decline on a national level. Now look, guys. The Nick Gurley Crash Bro, he's sort of like the king of the Crash Bros. Okay. He is literally on his channel for years said the entire U.S. real estate market would crash. He's admitted now that basically most of the country's not crashed. Now remember, there's 400 metro areas that are tracked by all this data, CoreLogic and Case-Shiller and everybody, okay? The fact that 2 or 3 of them are going to have price declines is a bit ridiculous, especially when they're up 80%. So you've had a little, and what is a crash? Let's say prices go down 20%. Is that a crash? They're up 80%. If you bought a house 6-7 years ago, you're still up 60%, right? And if you have 400 markets and you have 2 or 3 that go down and the rest are going up, that's at this point it's ridiculous that you're still using the word housing crash.
Well, so Crash Bros use that because they get clicks. This is not about their goal is not accurate information. Their goal is clicks because they make 6 figures a month off those clicks. So that's understandable.
Yeah, it was funny because he was on one of the TV shows and he was crash, crash, crash. And then the guy brought up a point saying, hey, look, home prices are up 40 or 50% just in the last 4 years. So you're saying they'll go down to 3 or 5%. I mean, that's really not very substantial, and he just kind of was like, oh, yeah, I mean, So, all right, here's another quote. This is from the head of mortgage firm New American Funding. You're not going to see home prices decline, says Rick Arvielo. There's just not enough inventory. Yes, there are some markets, a few markets. I think there's a couple Florida. There's a couple in the South. I think Austin may be one of them too. Austin's a pretty cool town. There's a lot to do there. Burgeoning tech.
Good barbecue.
Really good barbecue. I think a lot of people flooded in there, and maybe some people left when all the things that were going on in California sort of let up. But there's still people leaving California for other places, and we'll see how this works with Austin, right? Mm-hmm. Here's another one. Skylar Olson, chief economist at Zillow, agrees about the supply and demand imbalance. She predicts home prices will keep rising this year. Now, we're going to talk about this for a second because home prices generally do not rise from spring to fall. They go down. She thinks they'll keep going up. Welcome news for sellers, but not so great for first-time home buyers struggling to become homeowners. We're not in the space where things are suddenly going to be more affordable.
Right. Well, so they will be more affordable from the perspective that you'll have maybe slightly lower interest rate. If you purchased a home in the last, year and a half, when maybe interest rates were higher, your home may be more affordable when interest rates moderate and you're able to refinance. If you don't own and you're looking to purchase, you will maybe have a better interest rate, but you'll be paying more for the house. So from your perspective, that's probably a wash because your payment will probably be very similar.
Okay, here's another quote. This is from Mark Fleming, chief economist at Title Insurer First American Financial Corporation. No. Is the housing market in a crash? No. Period. There are still far more buyers than sellers, and that means a meaningful price decline can't happen. There's generally not enough supply. There are more people than housing inventory. It's Econ 101. We made a valiant attempt numerous times to go buy vacation home somewhere. Multiple cash offers, tons of activity, homes flying off the market within days. Interest rates are 7%. Right now, today, they're about 7%. It's not letting up. It's not this soft. If the housing market was going to crash, there'd be so many houses on the market. You would literally know it a year in advance. We had 26,000 houses in the MLS total. About 14,000 of those, I think, were just in Las Vegas. Mm-hmm. Right now, we have 2,400 houses on the market in Vegas. But remember, Vegas is much bigger than it was 20 years ago.
Mm-hmm. So bottom line is insufficient inventory, lots of demand. So long as you have more demand than you have supply, then your prices probably are going to remain stable at the very worst, or they will increase because of the pressure that buyers will put on the market by bidding one over the other to get homes that are desirable.
Okay, here's the chart. This is the home price chart. Now, you're probably looking at this chart going, wait a minute, if you go look at a Crash Bro chart, it makes housing look like it's gone straight up for the last 5 years. It's because of the way that the Crash Bros format their charts. They format them. It's like when they show you the temperatures and it gets in the 80s and they make it really bright red to make it seem like it's super hot, but it's actually, they just, they're using color to make it, oh my gosh, it's so hot, right? So here on this chart, this is home prices. This is pretty normal. What this is, first of all, what this shows is some seasonality. You can see how they go up and down, up and down. We had a little bit bigger up and down in 2022 because of interest rates, but it never crashed. It just basically went back to what it had been the year before, but then it went back up. and now it's back up to all-time highs. That's what this shows. But if you look at the trend of this, home prices have been going up really since probably, this chart doesn't go back far enough, but it went back to 2009. You would see home prices have been going up now for 2009. This is literally a 15-year bull run for housing that zero actual people that know anything, okay, that have said housing is going to crash or do anything stupid. This is a really good chart.
Anything else?
No.
Okay.
But I just thought this was, I think the chart tells the story.
Right.
I think if you look at this, you can pretty much say that, I don't know.
What you can see is the trend line, and the trend line is that real estate has been increasing in value over time. Yes, the road can be bumpy, but over time, real estate generally increases in value.
Right.
That's pretty much it.
Yeah.
Okay, so what's going on in your neck of the woods? Leave us a real estate related comment. We appreciate them. If you're interested in buying or selling in Las Vegas or anywhere else, please reach out to us and we'll be happy to help you if it's here in Las Vegas. You might even get to meet us personally. We met somebody the other night. We had dinner with somebody that we met from the channel whose property we sold.
Yep.
And if you're looking to do business outside of Las Vegas, we will find you a great agent. And we do travel extensively, so we might meet you in person anyway.
Yeah.
We look forward to your comments. Please remember to like the video, subscribe, hit the notification bell, share the video, and we'll see you on the next video. Bye.
Bye.